For me, I can be a bit of a perfectionist, there's no such thing as perfection in the markets. Every moment in the market is completely unique, and perfection just does not exist. So I think I would be quite tough on myself if I made a mistake, which would, ultimately lead to more mistakes. So I think learning to accept losses, accept mistakes as part of the game.
Griff, good to see you, my friend. How are you doing?
Yeah, well, good, Mike. How are you?
Yeah, I am very good, thank you. I'm very good. We're going to do something a little bit different today. We've had a lot of questions, a lot of requests to learn a little bit more about the way of Griff, or I don't know how we describe it. So we're going to do something a little bit different today. So it's just myself and Griff this segment, and we're going to go and do a bit of a deep dive into the way of the Griff. So Griff, maybe we can kick things off by you've been on the stream a few times, but we'd love to have you to kind of do like a proper intro for everyone. Tell us a little bit about yourself, your trading journey, and how you got to where you are now.
Yeah, sure. So I started trading about 5 years ago. Probably the same as a lot of people around COVID, a lot of spare time and looking for ways to make some money. And I started practicing a couple different strategies, and I found one that resonated with me. And I'd learned early on that it's worth sticking with one thing whenever you're trying to get into a business or an industry. You want to practice one thing and master it. Because in my life, I've always been a bit of a jack of all trades, master of none kind of guy. So I was like, right, this time I'm going to be a master of one strategy. And I found this strategy, and I back tested it for a year. And then I started live trading it about 4 years ago. And since then, I've never had an unprofitable trading year. I've been profitable every year that I've traded this strategy, just because I over prepared, I guess, and because I've been trading one way this whole time. Yeah.
So when you say you back tested for a year, do you mean you back tested previous data, or you forward tested live market data but just not on a live account?
So not on a live account. I back tested. And when I say a year, I mean like I spent a real life year back testing. I didn't just do one
Okay.
year worth. So I went from like 2018 to 20. No, it would have been even more, because it would have been around 2020, 2021 at the time. Yeah, so around 2018 to 2021, and then I back tested like all the pairs I was trading 2 or 3 different times. So I really got to learn them really well, and I really studied them carefully. Yeah, and I just practiced that really thoroughly, and made sure I was over prepared before I started trading with real money.
Sure. And so then now, so where you are in your trading is you're a funded trader, right? And
Yeah.
you've had obviously multiple payouts. You said you're consistently profitable for the last 4 years. You're obviously a trader with the fivers as well. So I know you've been funded with the fivers. So tell us about your experience with getting into prop and kind of going from, okay, I'm going to go live. Did you go straight
Yeah.
into prop?
I didn't. Prop was kind of the ultimate goal. I was a little bit keen, shows I wasn't as disciplined as I should have been, because my first ever month live trading, I made 17% profit, and I thought,
Wow.
this is easy. And turns out I hit a bit of a lucky month, I think. And
Yeah.
yeah, the following month I tried taking a challenge and I failed it first time.
Okay.
Because my original plan was to do my first prop firm challenge in January of 2022.
Mhm.
And I started live trading September of 2021. So I thought, right, I've got 3 months of live trading to kind of practice before I take my first prop firm challenge. But that first month went so well, I got ahead of myself a little bit.
Excellent. And so then you went into prop trading.
Yeah.
Started with the five. When did you start with the fivers?
I think I started with the fivers. It was pretty early on. They were high on my list. I think that would have been early 2022 as well.
Okay.
But I did the bootcamp challenge, which
Mhm.
took me ages to pass because there's obviously 3 phases. And to make sure that I didn't exceed the max drawdown, I did really low risk. So although is it a 6% profit target? I can't quite remember. Um,
Yeah.
I think
Hmm.
it's quite a low profit target, but because I did a quarter risk per trade, it took me I had to make like 30% to be able to pass it without exceeding the max drawdown because I
Yeah.
was doing such low risk per trade, if that makes sense.
Yeah, yeah, absolutely. So then you say it took you a while to get yourself through that boot camp, but you got yourself through it. You got yourself funded. Is
Yeah.
that right?
Yeah, I did.
That overall progress or that process, sorry, how long did it take you to get through that?
So I think from start to finish, it probably took me just under a year to get funded on the bootcamp challenge. One challenge, trading it for like 9 months. Yeah.
Yeah, yeah. Okay, fantastic. Well, listen, I mean, would you mind sharing us your Fiverr's dashboard? Let's have a look at your boot camp and your equity curves at the moment. So I know you're working on a few bits and pieces right now.
Yeah.
Your funded account, which was the 100K, was it, or the 125K?
Yeah, here it is. So this is my bootcamp 100K account, and I
Hmm.
actually hit a $5,000 profit on this, and I managed to scale it up to a $125,000 account. Maybe I can
Fantastic.
hop over here actually, and you can see the payouts I've had from the Fivers. I've had around $7,000, and I think that was just from the one. Yeah, that was all at once. So that was very nice.
Yeah.
And you can see based on the equity curve that it was pretty much just from like a handful of trades. I think it was
Mhm.
maybe 2 or 3 trades that took me to that profit target. And that's just the nature of my trading strategy. It's the reason it
Yeah.
took me so long to pass. It's because I have quite high risk reward, average win rate, and very low frequency. So you can see
Yeah.
there's a lot of trades here, just trickling around until eventually I did hit that big win. And yeah,
Yeah.
that's my trading strategy. I have maybe 2 or 3 big trades per year that make up the majority of my profit.
Mhm. Fantastic. So, you're obviously still trading with the fibers.
Yeah,
What's your current status with the fibers?
At the moment, I'm focusing on passing a 250K bootcamp challenge and a 100K high stakes, which I'm documenting on YouTube in a Road to 100K series.
Brilliant, fantastic. So your high stakes, you're on phase one or phase two?
I'm still on phase one, but I have hit the profit target, so I just have to hit the profitable days now, which is I think that's a new thing. I didn't know that was there, but yeah, I have to
Sure.
get 2 $500 days, and then I get to go to phase two. But yeah,
Excellent.
the high stakes challenge resonates a lot more with my trading style because there's
Mhm.
a bit more room for drawdown, whereas on
Mm.
bootcamp challenges, the drawdown is like 5%, I think. So I have to reduce my risk quite a bit because I can have drawdowns of up to 12% sometimes, which is fine on a personal account, but obviously on a prop firm account, I want to be extra careful because I
Yeah,
paid for the challenge. So I use
yeah,
really low risk and I really take my time.
yeah, absolutely. What's then the way you work it? Because obviously 12% is quite a big drawdown to go into, and obviously it's beyond the overall drawdown that you could get on a even on a high stakes account. Are you talking about your drawdown in equity or just at any given time?
So 12% is the maximum drawdown I've ever had in my 4 years of trading, and I risk 1% per trade. So I know that my biggest drawdown is around 12, what is it's worth around 12 losses. So the way that I approach that with prop firm challenges is I basically just make sure I have enough room for double my max drawdown. So for example, on this bootcamp account, I want to make sure that I've got enough room for 24 losses. So that I never exceed like half of the drawdown
Yeah.
the maximum, if that makes sense.
So you're essentially taking, let's say, for example, hypothetically, you've got 5% max drawdown. Okay. So then you're essentially splitting that 5% down into 24, let's say,
Exactly.
and each of those is then your maximum risk that you're prepared to give yourself per trade. And then you're comfortable with your strategy that that's even if you go into drawdown that you can get yourself back out. Yeah.
Yeah, exactly. It leaves me plenty of room. It's great because 5% is actually has relatively low like
Mm.
spreads and things.
Mhm.
Um, Sometimes I find that even though I've set it up in a way that I shouldn't really exceed half of the maximum drawdown,
Yeah.
sometimes I can come close just because I'm not actually being taken out for like 1R. I'm being taken out for
Yeah.
maybe negative 1.1 or negative 1.2 just because of spreads and slippage and things. But thankfully, I don't really experience that with the fivers because the spreads are quite tight.
Yeah, yeah, absolutely, absolutely. So, if you don't mind, we'd love to know a little bit about your strategy and how you actually do it. Like, how do you enter your trades? Because being comfortable going into drawdown is quite a skill in itself, right? And it's obviously
Yeah.
something that you're somewhat used to. So maybe you want to kind of talk the guys through what is it you're essentially trading, how you're trading, and then we can maybe see if there's some examples on the charts.
Yeah, sure. I'll just bring that up now. There we go.
Yeah,
Yeah.
perfect.
So the trading style that I'm trading is primarily just raw price action. I've practiced a lot in that first year, and all the years after, of course. I've practiced a lot just focusing on the way that the candles interact with each other and the way that they break each other's highs and lows. I'd call myself a price action or momentum trader, but I do primarily just focus on the shapes that the candles show. Um, and then the way that I kind of describe my entries are as vehicles to get into good price action. So the muscle that I trained is identifying good price action,
Hmm.
whether that's coming from a channel, maybe a really clear trend, staying out of range band price action. So by identifying good price action, I can then use my entries as a vehicle to get involved in this good price action.
Okay.
So that's kind of how I classify my trading strategy.
And where did you learn it all? How did you learn it all? Was it a particular course? Was it a particular guru that you followed?
Yeah. Yeah, so I was in a trading community called Guerrilla Trading, and they
Mhm.
actually have gone down now. They no longer exist. So the
Okay.
strategy, I think I'm one of the few people that's keeping it alive, which is quite funny. Um, yeah, it's a great strategy. It's really simple. It works well in other years. It works better some years than others. At the moment, it's kind of slow, but I've kind of refined over the years to a place where I know when to be patient, which Mike, I take no trades sometimes.
Hmm.
If we knew each other in like 2021 or 2022, I think you'd think I was quite a different trader because there's just way more setups.
Excellent.
So yeah, here are the three patterns that I trade, and I
Mhm.
also kind of trade a combination of the flag and these two. So these two I would call a break and retest. So I'm just looking for price to come back and retest this high. In the case of this reversal, this is a continuation. I'm looking for price to come back and test this high before continuing. So kind of like this, if I'm to illustrate that. And then a
Mhm.
flag is just I just mark it execute a flag. Obviously, these are very simple patterns,
Yeah.
and it has to start simple. It, it has to go complicated before it can get simple, if that makes sense.
Mhm.
So this
Mhm.
looks really simple at the moment, but then the more you investigate it, the more complicated it gets. And then the more complicated it gets, the more you're able to refine it back down to kind of being simple again. So
Yeah.
people who are just learning the strategy can sometimes be good as just as good as people who have spent years trading it, like me. Um, yeah, so these are kind of the entries I trade, but I also trade, just to touch on it, a combination of the flag and the break and retests, which would look like this or like this, if that makes
Mhm.
sense.
Yeah,
Yeah.
absolutely. And so looks like you're particularly looking at longs, but you're looking at shorts as well, right?
Yeah, of course. I have
Yeah.
no directional bias whatsoever, just wherever the market takes me. I think I'm just better at
Mhm.
drawing longs. I could try drawing
Yeah, yeah.
shorts.
No, absolutely. Um, I mean, look, the reason I ask is because some people do just trade longs and
Yeah.
some do just trade shorts because it's, you know, it's easier to spot it on the eye for some reason. Some people can see longs more clearly on a chart than they can see shorts, right?
Yeah, that's true. I
Hence
do
hence the
often
question.
invert my charts because I have the exact same thing where this short
Yeah,
doesn't look so good, but when I invert it, it looks great as a long.
yeah,
So
exactly,
I do that all the
exactly.
time.
So time frame that you're trading this strategy is a single time frame, right?
Yeah, that's right. I trade exclusively the 1 hour time frame, which is
Okay.
quite unusual. I think a lot of people are multi-time frame traders or even lower time frame, higher time frame. I'm right in the middle, and
Mhm.
that's the way I like it. I think there's definitely an edge in having multi time frames to analyze. But personally, I've just found it really easy. Just have 1 hour, just the 1 hour time frame, because I can quite easily see what's happening on the lower time frames and on the higher time frames. And I can give you an example. Say over here, these three wicks just barely
Mhm.
breaking higher. On the lower time frame, this is an ascending channel. It's doing that, you
Yeah.
can imagine, because the highs and the closes, high, close, creating an ascending channel. And the same way, I can quite easily see the entire week's price action just by zooming out.
Mhm.
I can kind of get a good idea of what the daily candles look like as well. So I find the 1 hour is a really nice in the middle time frame, and it just keeps
Mhm.
it simple for me.
Okay. So, you don't look at the other time frames whatsoever. You stick to the
No,
1 hour. You don't look at the daily to think, right, we're gonna have a bullish day or a bearish day. You're 1 hour and that's it.
yeah, literally 1 hour and that's it. In the trading community where I started learning, it was almost taboo to navigate between the time frames, which is quite funny.
Wow.
Obviously,
Interesting.
I don't mind having a look on the 4 hour if it's hard to
Mhm.
tell. But I only really put weight based on the way that I've been trading. I only really put weight on the price action on my screen. So about the last week's worth of price action. So
Mhm.
going on the 4 hour or the daily, I'd be considering, way more candles, which I
Yeah.
wouldn't otherwise be considering based on the way that I've practiced over the last 5 years.
Got you. Got you. And assets you're trading, I know there's particular assets that you've back tested. Is that right? So there's only particular assets that you would trade?
Yeah, that's right. So I've back tested a lot of different assets. And I've ended up narrowing it down over the years to six. So I don't know if you can see on the corner of my chart here, I've
Yep.
got AJ, AUD JPY, I'll say the full name, AUD JPY, AUD USD, Euro JPY, Euro USD, GBP USD, and NZD JPY. Those are my six currency pairs.
Okay.
But I think, as I've mentioned, like the trade frequency right now with my strategy is very low, and I'm
Mhm.
looking for ways to increase the trade frequency. So I do have a few other pairs which I need to test and consider introducing. But yeah,
Yeah.
these are the six that I've really mastered, and I know like the back of my hand.
Yeah. Yeah. Absolutely. Um, So, I mean, new NZD JPY. I'm really curious about that one because that's a bit of an outlier compared to the others, right? It's a little bit obscure. I mean, okay, you've got Aussie JPY, so I'm assuming it's kind of off the back of having Aussie JPY. Is that kind of the reason for that?
Yeah, exactly.
Yeah,
AJ, it can have really large moves. It can be quite a volatile pair, but when it goes, it really goes. And the
hmm,
nature of my strategy, a lot of it is break and retests.
yeah,
The break and retest entries I showed are my like highest risk reward strategies.
yeah.
Um, and on AJ, I find that it will literally tag me in by under a pip and then just fly.
Wow.
And so I introduced NJ a couple years after the other ones, and I've actually found it outperforms AJ now, which is quite interesting.
All right.
In the
Okay.
future, I'm looking at introducing NZD USD because
Hmm.
AUD USD is my best pair, and sometimes it'll nearly have a setup, and I go over to NZD USD, and the setup has formed there.
Yeah.
So I'm thinking of introducing that as my next pair, my seventh currency.
Okay, excellent. You mentioned that Aussie USD is your best performing pair, so maybe
Yeah.
that's one we can go and look at and see if you can give us some examples of
Yes.
your setup and how you would look for your trades.
Yeah, so I've prepared some. Here's some I made earlier. um,
Blue Peter style,
so
excellent. I like it.
yeah. So these were trades I took a while ago. Obviously, I've selected them carefully because this is just such nice price action to be able to show off. And there's a few different types of entries here. So I've got actually two different types of trades than the ones I described. This is a bit more experimental. This is I think a sweep entry, kind of trading highs and lows. This is
Mhm,
something I was experimenting with a little bit last year because I noticed the markets were going so range bound.
mhm,
It's something I'm looking at a little bit more again now as a way of increasing my trade frequency. But yeah, the I think this is a really good example where the price is just really ranging, going super sideways, and
mhm,
I'm basically just taking shorts at the highs and buys at the lows. Really simple, really easy, and just going for a 1 to 3. Um,
mhm.
and the only requirement for this entry is just to be able to read price action. And obviously, like I said, price action is my like bread and butter. I'm really good at identifying the different phases of the market, when to stay out, when to get involved. Um,
Mhm.
so yeah, there's a couple things here which I can go over. Um, the first of which is this downtrend. So I really like the idea of taking this short trade just based on this downtrend. But the
Mhm.
main thing I'm looking for is I'm looking for breaks not just above highs and lows, specifically breaks in the case of shorts, breaks above highs of
Mhm.
momentum, um,
Okay.
like highs behind these pushes down. So for example, this high over here, I wouldn't put a lot of weight on it because there's not really a lot of support from sellers in the market. Whereas over here, I really like this high because I know that there's a lot of sellers in this market.
Mhm.
So I'm kind of just looking for a break above where sellers got involved. And I guess if you want to break it down, the reasoning for that is um, if sellers are getting involved, then price is overvalued. So by getting involved at a level higher than where sellers considered the market overvalued, I'm getting in at a very good price.
Mhm.
That's kind of my logic. And
Okay.
you're also getting involved with some sort of support and resistance, which is great. And then I'm just
Yeah.
waiting for a shift in momentum. So I'm waiting for price to not just break above the high, but I'm waiting for a clear shift back down. I want a confirmation to the downside. And that's what I'm seeing in this candle right here on Monday morning.
Right. So that bearish candle that you saw on the Monday morning, that kind of significant push down, that was the signal for you to get in. Is that right?
Yeah, exactly. That was enough of that candle was significant enough for me to see a shift in momentum and to be confident enough that the market wasn't going to move up. And this is the same over here, where we're breaking up below these three pushes up actually. So I know that these lots of buyers means that at these kind of levels the market was considered undervalued or discounted.
Yeah.
So by getting in at an even better price, I'm getting in at a very good position, and then I'm just waiting for a confirmation. I know there's a few people that trade similar entries like this, where they look for a high or a low to be broken, and then they'll drop down to a lower time frame and kind of wait for a break of structure or confirmation. But I
Mhm.
found that if your stop loss is big enough, it doesn't really matter if you're entering. Here, here, or here. It doesn't really have a huge, significant impact of dropping down to the lower
Yeah.
time frames and having a really precise entry. Because
Mhm.
quite often you can just whack a market execution on the 1 hour and achieve like 80% of the same entry.
Yeah.
So I don't really that another reason that I like the 1 hour.
Sure. So your entry would have been what a sell stop order at the bottom of that candle at the close of that 1 hour.
No, just a market execution. So
Okay.
the way that because I'm trading exclusively the 1 hour time frame, I'm basically
Mhm.
just checking the charts once an hour at the end of each
Okay.
hour. And
Right.
if there's not really a lot going on, I know that I don't have to check the charts. And the
Mhm.
fastest entry that can form is my continuation model, because that requires one big impulse candle, one pullback candle, and one continuation candle. So I know
Mhm.
that if there's nothing going on my six currency pairs, I don't have to check the charts for 3 hours. And I come
Got you.
back 3 hours later and see if a continuation's formed, which is uncommon. Um, Yeah, that's the way I do it. And then just on the last 5 minutes of the candle, just as it's closing, I'm getting my phone, I'm getting MetaTrader set up, calculating my lot size, and then just as the candle closes, I hit market execution.
Okay, interesting. So you're kind of scanning through all 6 pairs in that last 5 minutes, essentially. Is that what you're saying? So if you
Yeah,
because obviously candle, 1 hour candle can change a lot in the last 5 minutes. So
yeah,
you're kind of assessing it, getting your lot sizes ready, and then deciding, right, okay, are any of these even close to being ready? And those that are, you're then waiting to see, right, is this actually going to close as I expect it to? And then you're kind of getting in that way. Is that the idea?
yeah, exactly that.
Mm.
It can be a bit tricky sometimes because you only have a few minutes to make a decision. I found that 5 minutes is optimal. Otherwise, I'll end up overthinking it and
Yeah.
spending too much time looking at the charts. Quite often, straight away because the way I trade is quite intuitive.
Mhm.
So I am just listening to my gut a lot of the time. I don't have. I used to have a very clear cut trade plan, but now my trade plan is a bit more open ended. Yeah, and I have quite strict rules not to check the charts during the hour because the
Okay.
candles can change so much.
Mhm.
So say I'm a bit uncertain on a trade, that is a sign to just stay out because otherwise I'll be there watching the candle, weighing it up. Um,
Yeah.
so yeah,
Y
the last 5 minutes and that's it.
So you'd say you become more discretionary over the years in terms of having, like you say, that gut instinct to get in, um, rather than being very, very strict with your rules about what structure you're expecting to see, is more instinctive and discretionary based on just the years that you've spent trading, essentially.
Yeah, exactly. So similarly to the way I drew that normal distribution of, it goes simple, then it gets complicated, and then it goes back to simple. And it's like beginner, i- intermediate, and kind of like master.
Yeah.
I kind of did the same thing with my trade plan, where I started off with no trade plan, and then I built this really elaborate, uh, complicated, mechanical trade plan, which was just, I think it took me about 15 minutes to decide whether or not I was entering this trade, just reading all through all my rules. And then eventually I've been able to simplify it to the kind of a position where now it's just all in my head and it's mostly feeling based. The way that I kind of will weigh up a trade is by looking at the pros and cons. So take this flag, for example. Um, it fits my plan, first of all. And then I'll look at all the like the pattern is valid, and then I'll look at all the things which is wrong with the trade. So first of all, we're kind of coming from a range, but there is
Mhm.
this sweep down here where we kind of broke
Mhm.
this low. Prior price action is kind of descending. So I know that we're price action is kind of doing this, and
Mhm.
then we go flat, and then we impulse up. So this is a good sign to me that price action is kind of slowing down, and then we reversed. So prior price action, very important. In this case, it's pretty good. It's fine. It'll do. Um, Big impulse, the impulse is fine. Large wick on the top, that's a bit of a concern. Normally, after a wick, I want to see a range. I have a different tolerance for different wick sizes depending on the currency pair. On AU like this one, I'd say this is a medium to large wick, which isn't ideal. It kind of brings the rating down a little bit. And then after a large wick, all I'm waiting for is I want to see uh, after a large wick, I want to be extra sure that there's no shift in momentum, and
Mhm.
that's normally in a range. But in this case, it's by loads of tiny candles retracing. So
Mhm.
rather than having just a regular flag, I've kind of got this little trickle down
Mhm.
like this, which really gave a good sign that price action is struggling to pull back because all of these candles fit within about one of these bullish candles. So that shows me
Yeah.
no shift. And then, yeah, based on that, I'd say kind of weighing up everything about this trade. I'd give it a grade. And if it's
Yeah.
above a 9 out of 10, I would take it. And in this case, I'd say this is a 9, about a 9 out of 10. So it fits my
And
plan.
and that kind of that grading system, did you? Because a lot of it we've already established is now discretionary. It's not like a physical checklist. But did you do something like a checklist to, when you were saying about that complexity curve, should we call it?
Yeah.
Was that kind of how you were doing it? It was like, okay, check that off, and then it almost becomes, muscle memory, and you just know what to look for.
Yeah, it did end up becoming muscle memory because I did make this kind of system where I was trying to give each variable a different weight, which is nearly impossible because the weight changes depending on like the pairings. So, for example, maybe a large impulse counterbalances the positive of a large impulse may be counterbalanced by the negative of a wick. So I would be trying to give the size of a wick a weight. So maybe this is this takes away 2 points from the trade. But yeah, it was really, really hard because different variables have different weights in context of one another. So in the end, I was just like, this is I felt like I was programming a whole I felt like I was writing a whole language. It was really tough. And in the
Yeah,
end, I was like, this can't be quantified. And now I'm a bit of a believer that trading is a bit more. It's a bit more of an art for me now. It's
yeah,
definitely a science as well. But I was treating it before as like 100% a science, whereas now
yeah,
it's a bit more of it's an art and a science for me, if that makes
yeah.
sense.
Yeah, absolutely. So, I mean, you've obviously gone through this journey from 2018, 2019, done all your back
Um,
testing,
yeah, from 2020. Sorry,
gone
I back
oh,
tested back
2020,
to
sorry.
2018.
Back tested, sorry. Um, back tested data from 2018, started in
Yeah.
2020, actually doing the back testing. Got funded in 2022, 23, something like that?
Yeah. So I started in early 2020 and I was funded by early 2022. So I was funded
Yeah,
within 2 years of finding out about trading, or
yeah,
within 3 months of beginning my live trading.
yeah. Okay. So, throughout that journey, what would you say was kind of the biggest challenge, or the biggest hurdle for you to overcome?
The biggest hurdle. Hmm. I think for me, I can be a bit of a perfectionist, there's no such thing as perfection in the markets. Every moment in the market is completely unique, and perfection just does not exist. So I think I would be quite tough on myself if I made a mistake, which would, ultimately lead to more mistakes. So I think learning to accept losses, accept mistakes as part of the game, probably my biggest hurdle. And the way that I did that was just by being a bit kinder to myself,
Mhm.
taking walks, when I'd made a mistake. I think it's easy to beat yourself up. I think just being a bit kinder to myself and accepting losses as part of the game. I think one way I did it actually was with a bit more of a data-backed way, kind of proving to myself that it's okay to take losses and make mistakes.
Mhm.
Because say in 2023, I made like 80% profit. And I think by taking that into account, I was like, wow, that means I can afford to make like 80 more mistakes. you know? So
Yeah,
making more mistakes, taking more losses, it doesn't really make a big difference on the larger scale. But if you're
yeah,
looking at trades on an individual basis, um, you can really be quite judgmental of yourself and say like, oh, why did I take that trade? But obviously, it's hard to see the larger sample size. Keeping that in mind
yeah,
is
yeah.
very important.
Excellent. Since then, obviously, you've been funded, you've had payouts, you've had some sizable, nice payouts as well.
Yeah.
Um, what are you most proud of in terms of your trading journey?
Oh, that's a good question, Mike. I think I think my resilience. I've like more than any monetary reward. Trading has made me a better person for sure. I
Mm,
think I was somebody that would, like I said at the beginning, jack of all trades, master of none, and that's
yeah,
because I would never stick with anything for more than like you know more than a few years. So with trading, I'm really proud of myself that I was able to stick with it for this long, and that's kind of the discipline of doing something when it's hard, when you don't really feel like doing it anymore. Um, I think that transcends trading and goes into all elements of life. You know, I find that now I'm able to stay disciplined in all sorts of other places, which otherwise I wouldn't have if I hadn't become a trader. So yeah, I'd say I'm most proud of becoming a more disciplined, like resilient person.
Yeah, and those kind of milestones that everyone kind of more traditionally talks about. So first payout, first getting funded. How did those feel?
Oh, it felt great. Yeah, it felt really great. I remember there was one payout I had. It was actually a six-figure payout. Um, and yeah, I remember I like fell to my knees and I was like, yes, I could not believe that it was real, you know. Um,
Yeah,
yeah, I think being able to celebrate is quite important.
yeah.
Because otherwise, yeah, otherwise, what's the point?
Yeah, absolutely, absolutely. That must have been one hell of a feeling.
Oh yeah.
Brilliant, Griff. One last question then, for everyone watching, for everyone who's maybe still on their journey. Maybe some people have been funded but haven't had payouts, like myself. Some people haven't even gotten funded yet, but they're at the very beginning. What's the kind of the one piece of advice, the way of the Griff that they should take away from maybe your journey that can help them on theirs?
Um, Let's see. Well, you know, I've already mentioned being disciplined and just sticking with one thing. So I won't mention that again. I'm going to say uh, having the skill of self-reflection and being able to be honest with yourself is a very, very, very valuable skill as a trader. And I'd say arguably the most valuable skill as a trader. And the way you can kind of train that muscle is through meditation. I think meditating a little bit definitely helps. Just being a little bit more aware of your thoughts and also where those thoughts are coming from. Because you know, if you're an aggressive trader, there's a reason for that deep down. You
Yeah,
know, and if you're a fearful trader, there's a reason for that as well. And if you can get to the root of where those emotions are coming from, then you can eliminate them, or you know, I wouldn't say eliminate them, but you can become aware of them, and then
yeah,
once you're aware of them, they won't cripple your trading anymore. So I'd say
yeah,
that's the number one thing. Because like I said, I became aware that I can be a bit of a perfectionist, and you know, just saying that isn't enough. You need to really dig deep. You know, when did I become a perfectionist? Like, how old was I when I became a perfectionist?
yeah,
And then once you fully understand yourself and you can start being a bit more honest with yourself, then you can trade a lot more freely, I think.
mhm,
Yeah.
yeah. Brilliant, brilliant. Griff, it's been great to have you on. Thank you ever so much for taking the time. I was going to ask you. So
Yeah.
you've obviously done your back testing. You've done all of the kind of the work behind the scenes to decide your six currency pairs, right?
Yeah.
I have a suggestion.
Oh, love it.
Right? Rather than picking a particular currency pair, okay. Now this might be a terrible idea, okay, and the guys in the chat will tell us if it's a terrible idea. But have you thought about using the strength score meter?
Is that RSI?
Mm, not exactly. It
No.
is. So I use there's loads of them out there, right?
Okay.
Um, but I use the baby pips one because it's nice and simple to look at, right? So what it does is it gives you, for example, on a given day, it will give you where the most strongest currency is and where the weakest currency is. Raf, just let me explain it, Raf. Just let me explain. Right? You see,
how
I
does it
knew this was going to happen. I knew this was going to happen because
how does it
Anastasia and LJ
determine?
give me a. We don't know. We don't. Every strength meter has its own calculations,
Oh,
right?
really?
Surely it's when I've looked at them and I've got my own formula for this, which I'm building on my own platform separately, but that's a whole different story. Um, they're a culmination of different metrics across all 28 currency pairs, right? And so they determine on a given time scale whether a currency is particularly strong or particularly weak. So it takes all 28 currency pairs and pulls it into this algorithmic calculation of whether a currency is strength or strong or weak, and so on. On baby pips, what you can do is you can look at it both in real time, but also at the last closed candle. But you can also look at different time frames. So you could, for example, theoretically look at the 1 hour, right? And so, for example, the 1 hour right now is saying that the CHF is really, really strong, and that the US dollar is really weak. Now, I'm not saying that this is the way for you to look at it, right? You could look at it on the daily, you could look at it on whatever time frame you want. I personally look at it on the daily, okay, and I will look at it in real time, but I'll also look at the last closed, because, for example, if I see that there's a big divergence between euro and GBP, and, for example, the USD and the CAD, well, if I take that out to, for example, let's say, for example, euro USD on yesterday, well, sure enough, yeah, we had a big pump. And so the idea is that you might then see, for example, your flag patterns or something like that on the 1 hour. You might see some of those setups appear that you wouldn't necessarily have checked otherwise. So rather than you kind of sticking to that one particular additional asset, might be worth just give it a try, maybe, maybe in some back testing, and just see, right, if I'm going to look at currency pairs. And the idea is not, because LJ and Anastasia give me a hard time about this, the idea is not to say, right, okay, euro is strong, USD was weak yesterday, so therefore we're looking at longs on euro USD. We may just as well be looking at shorts, right? It's just about the fact that there's a big divergence between the two currency pairs, and so therefore you're seeing something significant.
There's movement there.
Exactly.
Yeah.
There was movement, and so you might see a pull.
I know what you mean. Yeah, thank you. I appreciate you mentioning that. Yeah, I can understand how that would work well with my strategy, because if I've got, I don't have to be monitoring just these 6 pairs. I could just look at that, see which pairs are moving a lot, and I can look at, like, for example, I think CHF was, or USD was moving a lot, wasn't it? So I could just look at all the USD pairs. I could look at all the CHF pairs, and I can see if I can find any trade opportunities like that. And obviously, like here, this would be a valid continuation over here. Not sure if it's one I would take, but technically that is the break and retest model.
Yeah, exactly. So, I mean, in theory, it could be. I mean, it's maybe worth just having a look and journaling some back test ideas, forward testing it essentially, and see if it does give you that. Because obviously, to back test the strength scores, you have to have your own formula and all this other stuff, and it becomes a bit complicated. But just an idea, just something to maybe digest and think about. Because I'm determined.
New ideas,
I am determined to get at least one person converted to the concept of how the strength meter can give confluence, or at least give you the window of opportunity. Because I keep getting ribbed by Anastasia and LJ that, Mike, it's not telling you anything, it's all lagging data and everything else. And that's the point. It is lagging data, but it's showing you divergence of which is the strongest and which is the weakest, to see, right, is there maybe something else coming back, or is it a continuation? So anyway,
thank you. I'll let you know if I use it.
You've not completely laughed your head off at me and dismissed it entirely, so I appreciate
I
that.
would never do that.
Thank you, my man. Thank you, Griff. Thank you ever so much, mate, for joining us. Thank you for your transparency and honesty about your trading, and sharing us a little bit about your journey. I think it's been a while since you've been on the live trading room, but a lot of people have asked, hang on a second, I want to know a little bit more about Griff. So yeah, thank you for taking us into the world of the Griff. Guys, in the meantime, trade well, trade safe, and we will see you next time.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other content that we provide here at the Fivers. We'll see you in the next one.